The IMF is in full preparations for hosting thousands of delegates and media at the 2023 spring meetings in Washington, D.C. Now, ahead of those discussions, CGTN's Ramanyang spoke with Sergio Pimenta, who is the vice president in charge of Africa at the International Finance Corporation. And he started their conversation by asking if the IFC will maintain its focus on the private sector in low-income economies, or whether it will pivot to middle-income ones, as has been proposed in a 2022 strategy review of the work of the World Bank Group.
And when you look at the main topics that this evolution discussion is going on, discussing on, like climate, like fragility, like gender, all these issues are extremely relevant in the low-income countries and extremely relevant in Africa. So, I mean, let me just tell you a little bit where we are. In IFC, for instance, last fiscal year, I mean, our fiscal year is from July to June, we have brought to Africa, we've mobilized and financed $9.4 billion for the African continent. This is the highest amount of financing that we've ever brought to the continent. And we are on a trend to increase that amount. We are a few months away from the end of this fiscal year, and I'm quite confident that we'll be given a higher amount, we'll reach a higher amount this year.
Let's just do a status check on some of the investments that the IFC has made. I know you've got roughly, Nigeria is probably your biggest portfolio with at least $2 billion invested there. There's another $2 billion invested in South Africa as well. The general macroeconomic conditions across Africa have been pretty adverse over the last 2 years. First hit by the pandemic, now there's a surge in inflation that economies are struggling with. How has IFC's portfolio performed given those headwinds?
So IFC's portfolio in Africa has been resilient, and I think it really shows the quality of the clients we work with. And what is also interesting, you're quoting like our portfolio in Nigeria, South Africa, that are indeed our largest exposures in the continent, is that when you look at the last 5 years, there's been an evolution of our portfolio of a much bigger diversification in terms of countries. As of last year, our portfolio, when you look at the top 5 countries in the continent, that represents about 65% of our portfolio. It used to be above 80 a few years ago. So we are diversifying, and the big focus that we are really pushing forward is to support the poorest countries in the continent, the small countries, those that traditionally are more difficult to support for a development financial institution.
Looking at your numbers last year, you also pointed out that you've put in around $9.4 billion into trade finance, and that the annual report made this interesting observation that a lot of commercial banks are trying to pull back from that space, effectively creating a gap that you're trying to fill in there. So two-part question here. Why is that pullback happening? And B, how big is the opportunity there for trade finance?
So as you mentioned, our financing last year went to 9.4 billion, and that includes 3 billion of financing for trade and supply chains. Excuse me. And that's an important part of our business. It means that the long-term finance was 6.4 billion, which is also, by the way, a record high number. But when we look at trade, the reason we've stepped up is, as you're mentioning, that we feel that there's a very strong demand for this type of product. And in particular, and that's, I think, a very important point in our approach, we are focusing a lot on intra-African trade. So we are supporting companies from East Africa doing trade with West Africa, North Africa, with South Africa, Southern Africa. So that's one part of the trade that we are really supporting. We launched an initiative that is really dedicated to this type of trade.
When it comes to the question of climate change, right, it dominates strategy discussions at the bank level, at the IFC, across at the IMF as well. There's an interesting tension, however, that even the strategy document we spoke of at the start did mention. Quote, it's important to recognize that developing country governments with limited resources and increasing pressure have little incentive to invest in long-term climate adaptation measures or pandemic preparedness, because these benefits are not realized for decades. So if you use, for example, housing, which is another part that IFC's been particularly active in, you know, governments are more focused on affordable housing rather than necessarily making sure that it's also green housing at the exact same time. From your perspective, you know, managing the portfolio in Africa, how do you manage those tensions? Because policymakers here will say, look, I need to get energy to my citizens. I need to get housing, affordable housing to my citizens. This climate change problem that we're talking about might not necessarily be an immediate thing for me.
So Rama, climate change is extremely important in Africa. And I think we all know the data, but it's very clear that on the one hand, it's the continent that has least contributed to climate change. And on the other hand, is the continent that is being the hardest hit by climate change. And when you look at whatever statistics you want, you will always see that same dilemma, right? So what Africa needs to do is focus a lot on adaptation, because the consequences of climate change are hitting the continent. So the continent needs to adapt. I think there's some estimates that say that we will need about $100 billion by 2040 to address adaptation in Africa, and actually we could even say there's an opportunity of investing this amount to really help.
To deliver green housing, but also at an affordable price. Isn't that the tension there?
You can, and this is where I think we really need to be very clear. When we build new houses, and when we're rehabilitating old houses, you can incorporate green elements so that the houses are more resilient, that they consume less energy, that they consume less water also, by the way, and that they consume less materials. And you can do that while at the same time making the houses affordable. We have financed a number of clients from South Africa to Morocco that are doing that approach, exactly that approach. If you build it in the design of the houses up front, the cost goes down. If you do it with a certain scale, the cost goes down.